cluster trade levels. Last week we saw some of the biggest transactions that we've ever seen from an algorithm. This week we face off at the exact same zone. So what should we be paying attention to as traders and investors? In today's video, we talk about the island reversal on the S&P 500, the idea that credit default swaps are now becoming a concern in the future, and how that's leading big players to start to look at alternative assets. Could it be the time of silver is just about to come? There's a lot to break down, and there's some huge breakouts that we want to discuss in today's video together, including the massive options flows. Tesla just broke a big call wall. Why was that? Let's take a look right now together, guys. This one's not to be missed. We'll see you in a moment. Well, welcome back, everybody, to a sea of green as Trump pauses the EU tariffs and markets, of course, rally back up to their key levels. My name's Tom, and in today's video, we have a lot to discuss, including the latest macro, the data, and, of course, the options flow. But let's kick things off with, of course, the credit default swaps, and they're spiking again here in 2025. And as many of you will remember, this has been a bit of a cautionary tale for the future of markets. Not so much what's going on right now, but the future could be less certain. Why do we need to pay attention to this? Well, listen to some of these stats. In 2007 and 2008, we saw credit default swaps surge in mid-07. The S&P 500 peaked soon after, and a 40% drawdown occurred after that. In 2011, we had a Eurozone debt crisis where US CDs jumped with total contagion fears. The S&P 500 then proceeded to drop after making a new peak, 15% in the next 6 months. Then the Fed launched Operation Twist. So we've seen this a couple of times throughout the last 15 years, but will it become a concern again in the future with some of the largest amounts of treasuries ever recorded needing to be refinanced? Well, of course, a lot of people are looking at the Bank of Japan, and specifically, they're looking at the Bank of Japan maybe starting to sell US treasuries and move into what has already been an illiquid market, which is the fact that they own their own government bonds. Have a look at this. 52% of the Bank of Japan, it owns basically the government bonds. And we can see here that illiquidity is becoming a concern again, as liquidity in JGB, so that's government bonds from Japan itself, have now spiked to levels that we haven't seen since the Lehman Brothers. So there are credit concerns happening here in the markets, guys, and of course we need to be paying attention to them. But what about the most recent price action? What's going on here? Well, as Trump removes the EU tariffs for now and puts pauses on them, we obviously have seen this game before. Trump puts in a big number, he reduces that number or even pauses it, and then the market goes up, basically bouncing off those levels. And each time, as you'll notice, that Trump puts on these larger tariffs on some of the biggest trade partners in the world, the market's reaction to the downside is less and less. And that's because basically no one's taking it that seriously anymore in terms of lasting for a long period of time. It's one of those classic case scenarios that we've seen this before, so we probably know how it's going to play again. But what about these cluster trades? What about these rare positions that we don't often see at a key resistance? Well, as it turns out, we just hit the cluster again over the last 24 hours, and we started to see a couple of transactions come in near the close for the triple Qs. And of course, the Nasdaq is the most important market to be watching right now, as it's leading this recovery with semiconductors and technology stocks being the kind of forefront of this, including one of the ones we like right now, which is of course Google, doing well over the last 24 hours. So with a bounce back up to this level, do we expect some form of resistance? Well, we'll look at that later on, but we did see a couple of large trades. Specifically, we saw a large trade and a dark pool sweep at that come through one of the large MAG funds. This is MAGS, the Round Hill Magnificent 7 ETF, and there was a large dark pool sweep right at the close that came in. Now, it doesn't necessarily mean that it's a sell, but obviously we've seen these at inflection points several times. We saw it after that huge buy that led to a sell-off. We saw it at the peak back in December of 2024. And of course, we saw it as a big purchase back in April during the crisis period that happened then. So could this be a turning point for the markets? Have we hit a cluster? We are now at the most important resistance level. And if this level is broken, it could be that markets are about to make an all-time high. Now, why are markets going up? Well, a lot of it has to do with, of course, the investor wall of worry. We often talk about sentiment on this channel, and we know that nobody has been more bearish than 2008, literally the points of the worst part of the global financial crisis, than what we've seen during this tariff kind of discussion. Now, the markets obviously changed a little while ago and started to bounce back up, but we continue to see this red period of time, basically where equity ETF flows are showing markets selling into that rally. Effectively, there are people selling the rips, and at the moment, the dips are being purchased, at least from what the previous notes we've had, by retail traders. People like you and I seem to be buying the most. And this has happened a few times. 2020 it happened where retail got the bottom, and then of course Wall Street had to stuff the kind of levels around here to try to get back into that rally and start leveraging up. And we saw something similar happen here in 2022 into 23, where we got a lot of retail trying to buy the dip the whole way down. Ultimately, of course, that was correct. And then we saw a couple of pullbacks to this area. So what are we facing off right now? In most markets last week, we would have pushed towards the 5,600, 5,660 level. But this market is a little bit different, driven in many ways by tweets that are obviously pushing markets up and down very quickly based on tariffs themselves. Well, based on what we're noticing here from China, it could be that China is not suffering as badly as people expected in terms of overall new customers. China's exports are actually now at an all-time high, while obviously the trend continues here when it comes to Chinese exports to the US, which have already been dropping for quite some period of time and continue to, of course, drop off as the tariffs have taken, some dent out of this market. In terms of where people are going, where are we seeing the flows move in the markets? Well, most flows seem to be going into alt assets, Bitcoin, gold, and silver. The holy trinity of alt assets, it seems, at this stage. And central banks have been at the forefront of buying gold. Are they now starting to become the forefront of buying silver, though? As we suggested in our weekend video, it looks like CTAs, which are momentum-based trade funds, are starting to play catch-up on silver. And this helps with that silver-gold ratio kind of concept. What about cyclical stocks? Are they continuing to do well? Well, it turns out, yes, they are. We saw, of course, a switch on this last week, which we've been documenting, which was a defensive switch at the top of those markets that then sold off into 57.50 on the S&P 500, reversed by Trump putting a pause on tariffs. But you'll see the overwhelming part of this rally so far has been led by cyclical stocks, including technology and semiconductors. And it makes us wonder, are we more in this part of the market? That is a similar narrative to the tech boom, where markets kind of rally up and then they start to find, some problems. I would think we're more in this kind of component here, or even this kind of component here, nearer to the end. And the reason why I say that is because of the nature of, firstly, the aggressiveness of the market. Secondly, the aggressiveness of the V-shaped recovery, and the fact that we are climbing the wall of worry, but this time with credit default swaps going up. And that's never been really a great sign. What do you think in the comments down below, though? Are we following a similar path? Are we also following the first 100 days and beyond of some of the bigger reformers in terms of presidents, where we see something happen between 200 and 250 days? This is another pretty big overlay that we're seeing at this stage. And of course, we always like to bring overlays into our discussion. And it's important because correlation can be used as a partial predictive power, along with, of course, flow breaks. This week, really, it's about one thing: NVIDIA earnings. Wednesday after the close, we're going to find out what's happening with the most important stock in the world and whether it's continuing to see and, of course, justify massive gains. Remember, the options market is proofing in at around an 8 to 9% movement in terms of options flow, and that's going to be something very important for all of us to watch. We will be doing a special on NVIDIA on our next video, so make sure to subscribe for that. Central bank liquidity increasing across the board, but really the big increase that we've seen over the last couple of days has been from the PBOC. China has started to liquidity inject, more on that coming in, and that could be a pretty good sign for things like HSI as well in the future. But will we get any of these gaps filled? We just saw an island reversal back for the S&P 500 as it continues on its way up. It hit the daily 20 which is, of course, a major level. It also hit the daily 200, which is around this zone. And this has people wondering, is that all we're going to get? Is that the biggest sell-off that we're going to get here in the markets during this, what has been a pretty much V-shaped rally? Well, it really comes back down to a lot of these tweets, but we do need to remember that around this 59.50 level, we've also got a bunch of options. So let's take a look here at the futures market. These are the updated options levels in terms of the day moves, expectations. You can see the resistance or high is on the options high level. This current resistance sitting around 59.20 is an interesting zone. We managed to bust through this 58.80, which suggests that now pullbacks will be met by bull demand and that it's going to be very difficult to get into the 5600, 5660 level. And of course, options lows currently on the demand support. But let's have a look at the actual options call walls themselves. 59.50, it remains a massive call level throughout the rest of this week. And you can see here, it continues to come up along with 5900, which is the main two. Now, if we break through 59.50, yeah, you've got to think markets are going to start rallying pretty hard. But for now, this is still a call wall resistance. And it seems to be prevalent here in the Qs as well, where we closed at 521. And you may notice that between 520 and 530, there are a ton of calls. Now, we often don't bother looking at the Qs because we find the S&P 500 options flow is better. But there are clearly some signs here of some massive options that are all around this resistance level. So what this is going to do is it's going to be one of those trigger points. We know that dark pool transactions, and we also know that cluster trades occurred at this exact zone. We know that they led on to, of course, sells, and now we have found ourselves back at the same level. And basically what happens here is going to be a reaction. Is Wall Street looking to push to the next main equilibrium point, or is Wall Street looking to sell this rally again on concerns of whatever reason? Could it be to do with yields? Could it be to do with credit default swaps? Those types of things. All of those are relevant. As you'll see later on today's video, we still have a problem in the options market where, the differential in the options and bonds seems to be continuing to rise again. And that's often been an early warning sign of both pullbacks and also a great sign when it goes reverse to that, to buying the dip. And so far, that's been incredibly good for the last 2 to 3 years. So we'll look at that in a moment. NVIDIA, 140 is the call wall at the moment. We're trading at 135, which was last week's call wall. And Tesla is well and truly through it. Driven, I would say, on hype of course, those robots. If you haven't seen the video right now of them dancing and doing tasks and all sorts of things, then you probably haven't seen why Tesla in some ways is moving through. I've also heard that Elon's getting angry again, which means that he's getting fiery in terms of running the company. And this is clearly an absolute wall of calls, creating a positive gamma event. So far, so good in terms of seeing some strength here out of Tesla. And obviously, a lot of traders will be rejoicing on that because what's the next level? You see it, 400. As we've said, markets like to move from equilibrium to equilibrium. And sometimes Tesla can do whatever the hell it wants, even if the markets do sell off. But for now, breaking 350, pretty big thing. Generally is lining up with that kind of 400 target. Hopefully that can happen for the people that are looking for it. VIX volatility spiked. We were looking for a secondary spike after that huge rally. We've talked a lot about secondary spikes being very common. Is this it? Short-lived. EU 50% tariff next day. EU not 50% tariff pause. We'll talk about it and we'll see how it goes. Well, that's the nature of the market in 2025. And obviously we see a bounce here and we see a bit of a drop off in the VIX. And more importantly than that probably is the options spread differentials, which spiked and have yet to come back down. Now, when we see these spread increases, it often means risk on. Risk off, I mean. In this case, it's a huge sign of generally something getting a little bit nasty in the markets. We saw this happen middle and late of Feb, and obviously that led on to
TD Cowen raised Microsoft's price target to $540, citing potential AI revenue growth from $4 billion in 2024 to $24 billion by 2026. Analyst Derek Wood emphasized the positive impact of Azure AI and OpenAI on overall growth, suggesting a return to mid-30% growth rates for Azure, which could attract more investment into Microsoft. Tesla Inc. stock has surged over 27% recently, driven by tariff delays and CEO Elon Musk's commitment to prioritize the company. Despite this, Tesla remains down 10% year-to-date due to disappointing first-quarter results and increased competition. Analysts maintain a hold consensus rating with concerns about declining interest and market share in key regions. The average price target suggests a potential downside of 22% from current levels. NVIDIA's upcoming earnings report is highly anticipated, with expectations of significant revenue growth despite challenges from U.S. export restrictions to China. Analysts remain optimistic, maintaining a buy rating due to robust demand for other products, including a $3 billion order for Blackwell GPUs. The company is also exploring new chip launches to mitigate losses from the H20 chip ban. Overall, NVIDIA's performance could influence the broader tech sector.